Good evening everyone, Ads here from Unity Trading Group. Welcome to your Thursday update. Of course, before we begin this evening, hit that like button, tap the subscribe button if you can, and of course tick the bell to stay updated on all the future content. We aim to stream 5 days a week, and you are here on a Thursday, so let's begin. BTC, where have we been, where have we gone, where are we at, what have we been talking about this week? So, first things first, we've been really speaking about this formation. So a rising wedge formation usually ends in a bearish scenario, and that's what we've seen. We did have a movement down to retest or test for the second time our level of demand that we discovered. Of course, we've had one test and a second one. We did retest that pattern for a movement to the downside. This was one thing that we spoke about yesterday. You don't believe me? Go have a look at the channel, have a look at yesterday's update, and of course this was a scenario that we spoke about yesterday. It was like this. That was something that we were looking at. That has nicely come to fruition tonight, or today should I say. So it's been a good movement for BTC and a decent result for what we speak about here on the updates. And we moved to the next possible level of demand and looking at the pause in the market. So a couple of things I want to speak about in terms of this demand. In this instance, with this demand level, we're really looking at a low quality level. And what does that mean? So low quality means it's not on a market pivot point, and it can break fairly easily. You could see the validity of what I'm talking about because the wick penetrated or moved through that level of demand quite fiercely and quite profusely. So where to from here? Where to from here? We've obviously gotten rid of this level of demand now. So we are at the extremities currently, just about where we've got a higher quality one just underneath us. And that could be designated with this area here in which I have drawn it. So we've got the pause in the market to the left-hand side. We've got two retests, one of which is the 10th of Feb, the other of which is the 28th. So we've got two retests to validate this zone's position. And of course, we can probably draw one again here, but it's not too much different. So if I'm drawing this one, I'll draw it in. It's something like that. So it's very similar. We're looking at 44,000 pretty much in both scenarios. So I'll get rid of the purple one. So this is the area that's going to be most important to me. And it looks like we'll probably head back down. Head back down to this area again for a second touch before we make a decision on which way we're going to go. So we've had a fairly decent reaction off this level, but in the same token, we have moved through this level quite significantly now, and we are still trending below the 50 RSI and looking like we'll probably retest it for a second time to gauge whether or not we're going to fall down below to 44. 44 is still on the cards at this point, just looking at some of the price action we're seeing on the chart currently. So all in all, two things could happen right now. We're looking at a swing high to low Fibonacci retracement level. We are getting stuck on the 38.2 as it stands. That is the most common area for a retest before a movement down. So 1, 2, 3, 4 could be the area that we're looking for. This could be the scenario that takes us back down to 44K. The other option is we need to move back up, retest the 61, and of course move past the 78 to really invalidate this pattern or invalidate this movement. And that really coincides very nicely with a very low quality in the way of this time frame and how big the zone is and everything like that. But if we are to move down and then if we are to retrace back up, I would need to see this 78.6 and this area be broken for a retest and a reversal towards the upside. Currently speaking, if we're looking at the price action in front of us, we are getting stuck on the 38.2. So it looks like this will be the play for me at this point. So it just comes down to what BTC wants to do over the next little bit, what sort of pressure we get. But it looks to be like we've made a lower low, we are making a lower high, and we will continue towards the downside for the immediate term for BTC. Next one I have a look at this evening is ETH. So ETH faring the same fate, although not as drastic as Bitcoin. If we are to see this movement continue, and we are seeing that being reflected in the current candle, I'm looking at the immediate downside towards 3,500, and that would coincide nicely with our 00 fibs. And if I draw the fibs in, if I give you a fresh one to look at, let's have a look. Swing low, always draw from left to right. So swing low to high, we're breaking through the 23, and the 38 plays in nicely at 34.4. And that coincides very nicely again with our level of demand there. So that looks okay for Ethereum in the immediate term. We'll make a decision on which direction we are going to go pending our movements at the 38. Next one we'll have a look at this evening is we'll have a look at XRP, because we haven't looked at it in a couple of days. So XRP, exactly the same sort of fate as BTC. If we are to see XRP do any sort of movements, I'd be looking at swing low to swing high, and excuse me, looking at the 61.8 at $1.24. So that's looking like we've been retested there again. We are looking for movements down currently because we have made lower lows. So the next valid zone to really test is that 61.8. And then of course, if we do continue towards the downside, will be the 78.6 at 109. This is not hard. It's not hard. All you're doing is using your Fibonacci retracement. Always draw from left to right, and that coincides again. If you're looking for retracements to the upside, you always draw from left to right. And you can see immediately, if I draw this from the other way, you can see where we've been headed for XRP. Left to right, 78.6. So 1 and 2. We retested 78.6, and then we continued to the downside. So very easy and a very, very powerful tool to have in your arsenal, Fibonacci is. Last one for this evening is the DXY. Let's have a look at that. It is a regulated market, excuse me, not financial advice, just ideas and opinions of us here at UTG. And touching again on that Fibonacci story, left to right, retrace to the 61, and that coincided nicely with a level of supply there. All in all, a good result for what we've been talking about with the DXY. We've had a decent rejection, and we are about to close in an hour and a half on this level of supply. It would seem to me that we would probably break through this level, looking like we are trending now above the 50 RSI. We've satisfied Steamroller, of course, and if we look at Gravy Train, we could probably see that we broke back into the cloud, creating a indecision or even a reversal grey area, and we could this evening or even towards the rest of the week continue up, break above the 78, and then retest our level at 91.5-ish up the top there in the way of a level of supply. That would be it for the DXY, in my opinion, for now. We will revisit this tomorrow night to finish off our week, and we'll see how we go. Thank you all for joining me this evening. It's been a little bit of a shorter one. I wanted to make it nice, short, sharp, and sweet for all of you. Thank you all for subscribing. Thank you all for being here. Join the Discord. The links are down below in the description, and I'll see you tomorrow night. Bye.